Let's break down how to put together a cash flow statement in a clear, step-by-step way. First, you'll want to grab the company's income statement and balance sheets for both the current and previous periods. These documents will give you all the numbers you need, like net income, depreciation, and details about changes in assets, liabilities, and any financing moves. Start with the operating activities section. Begin with net income from the income statement. Add back any non-cash expenses such as depreciation or amortization, since these reduce net income but don't actually use up cash. Next, adjust for changes in working capital. If accounts receivable or inventory have increased, subtract those amounts because that's cash tied up. If accounts payable or accrued expenses have increased, add those back in, since that's cash you haven't paid out yet. When you're done with these adjustments, you'll have the net cash from operating activities. Next is investing activities. Here, list out any cash spent on buying property, equipment, or other investments. These are outflows. Also include any cash the company received from selling assets or investments, which are inflows. The net of these gives you the cash provided by or used in investing activities. Then, move on to financing activities. This section covers things like cash received from issuing shares or taking out loans, inflows, as well as cash used to repay debt, buy back shares, or pay dividends, outflows. Tally these up to get the net cash from financing activities. Now add up the net cash flows from all three sections, operating, investing, and financing, to find the overall increase or decrease in cash for the period. Add this number to the opening cash balance from the start of the period, and you'll arrive at the closing cash balance. This final figure should match the cash amount shown on your ending balance sheet. Finally, double-check everything to make sure your numbers line up with the financial statements. Present your cash flow statement clearly, making sure each section and subtotal is labeled so it's easy to follow. By following these steps, you'll end up with a cash flow statement that gives a straightforward picture of where the company's cash came from and where it went during the period.